Good afternoon, everyone. Welcome. My name is Ken Gee. I'm the owner and managing member of KRI Partners. I'm thrilled to have you here. I'm also thrilled to be able to talk to you today about our newest multifamily real estate fund. We're currently accepting investors for this fund for a limited time. Hopefully, after this presentation, we'll be able to add you to our family of investors. Before I get into the details of the fund, let me just review a few highlights about KRI and why you might want to invest with our firm. First of all, it's a founder-led firm. I formed it back in 1997, so we've been in business for over 23 years. We currently specialize in BC Class multifamily value-add deals. That's what we've always specialized in. That's what we're good at. Our senior management team has managed about 15,000 units in 3 different states. We've owned about 15 properties worth about $60 million. And our investors have earned 20, 25, even 30% annually return on their investment. All right, so now you know a little bit about KRI. Let's talk a little bit about why we're forming this fund as compared to the typical syndication model that everybody's used to. Let me explain how syndication works, for those of you who don't know. A syndicator goes out and finds the deal. They then attempt to lock the deal up, and then they go out and raise the funds to close that deal. The problem with that syndication model in a competitive market like all the markets in Florida is that they're competing with folks who have money in hand or equity in hand. And so what happens is the sellers treat those syndicators as basically as second-tier buyers. They do that because they know there's always this risk of default because they're not able to raise the equity. And they also know that syndicators are generally not as experienced as folks that already have the money in the bank. So what happens is syndicators oftentimes have difficulty finding deals. They usually have to pay up or find some other reason to convince that seller to go with them rather than someone else who has money already in hand. Now let's compare this to a fund. In our case, as the fund manager, our buying process is exactly the opposite. First of all, we raise the equity, like we're doing here today. And then once we have the equity in hand, then we go find the deals. Fund managers are always preferred buyers, especially in competitive markets. It's because it makes sense. It's because they already have the equity in hand. The certainty of closing for that seller is much higher with the fund manager than it is with the syndicator. So suffice it to say, buyers with funds in hand always get the best deals. It just makes sense. So that's why we're talking to you today about this fund. All right, so let's talk about the fund's investment strategy. First of all, we're always going to focus on apartments. Like I said earlier, it's value-add apartment deals. So that means that we're going to find a property, make physical and management improvements, and add value through that process. The size property is somewhere between 100 and 250 units. Usually we stay in the low to mid 100s. That's usually our sweet spot. We're focused right now primarily in Florida. And as I said before, we're looking at BC class assets in good neighborhoods. And we usually try to hold these assets 3 to 5 years. Sometimes we're able to sell them a little bit quicker than that, but normally it's 3 to 5 years. Our fund itself, the minimum to close is $10 million. We're targeting $25 million, but we're certainly happy to close with $10 million. As an investor, the minimum commitment is $100,000, and right now we can only accept accredited investors. The fund manager, that would be me. I'll be personally investing between $500,000 and $1 million right alongside you as an investor in the fund. Our underwriting target return is at least 15% annually on our deals. We always pay a preferred return with our deals, and this fund is no different. The current preferred return is 7% annually, and that is paid quarterly. So what basically happens is, in our deals, you get all of your money back, you get your 7% preferred return, and then, only then, do we participate in the profit of the property. On the fee side, we do everything we can to be as efficient as possible and keep our fees low. We charge 150 basis points asset management fee, and that's only on called capital. And then we do have an acquisition or disposition fee, which is between 1 and 1.5%, depending on the size of the deal. Please take a look at the private placement memorandum. There's more details in that document than what I want to bore you with on this slide here today. But suffice it to say that I think you'll find our fee structure to be one of the lowest in the business, and our profit split is absolutely designed to make sure that our goals are aligned with yours. If you do well, we do well. If you don't, we don't. It's literally that simple. All right, so let's talk about our rationale. Why do we do what we do? Why do we invest in apartments? Why do we like the state of Florida? And why should you want to invest with KRI? Well, let's talk about apartments. The bottom line with apartments is I cannot find a better risk-return profile. Apartments are relatively low-risk assets. I mean, everybody needs a place to live. That's not going to change no matter what happens. We, because we use a value-add business model, can earn extraordinary returns. Like historically, our investors have earned 20, 25, even 30% plus annual return on their investment on a relatively low-risk asset. I like that risk-return profile, and I can't find a better one anywhere else. That's why we do apartments. Why do we like Florida? Florida is really about a number of things, the least of which is economics. Let's look at the demand side for housing. Almost 1,000 people move into the state of Florida each and every day. Some of those people are wealthy, but most of them are not. They are moving to Florida to pursue jobs. They're looking for a better quality of life. God only knows that sun shines there a lot more than it does in most parts of the country. The housing there is relatively affordable, and it's got an excellent low, no personal income taxes. So generally speaking, it's a much lower tax state. So that attracts people to move to Florida. Now, let's talk about the supply side, right? We just talked about demand. About 1,000 people are moving into the state of Florida each day. That's net of people moving out. On the supply side, builders are definitely building new properties. No question about it. The problem is, well, the good thing for us is that they're building Class A properties because that's all they can afford to build because of the cost of construction. So their rents on those Class A properties are $1,800, $2,000, $2,500 and up per month. They are not building BC class properties. It's because they cannot afford to do that. The cost of construction, as I said, are just too high. So we have no new BC class properties coming into the market. But we have increasing demand, like I explained before, like net of about 1,000 people per day. So where are these people moving to? Most of that 1,000 people per day are moving to BC class properties that are being renovated by value-add investors like us. So the bottom line is we have increasing demand and we have stable supply. Think back to your economics class. That automatically puts upward pressure on rents. So what it allows us to do is to take our value-add strategy, where we're already adding value, put it on top of an economic situation that is very favorable for us, and the returns end up being just incredible. I don't see this scenario changing anytime soon. That's why we like the state of Florida. All right, so why should you want to invest with KRI? This is where the rubber meets the road, right? Number one, we've got experience. Number two, we've got an excellent track record. 3, our core investment discipline is really solid and has worked for us for 23 years across multiple real estate cycles. Number 4 is our ability to execute on our business plan. That's critical because all the plans are great, but if you can't make it all happen, it's pointless. Finally, 5, we're deeply entrenched in our target markets. We've been there, we're there every day. We know these markets very, very well. And finally, last but not least, our investors always come first with us. They come first when we figure out how to structure the fund. They come first when we figure out when to exit the property. They always come first, period. That's just the way it is. All right, let's talk about our experience. I've already mentioned this, but our senior management teams managed about 15,000 units. That's a lot of management experience. In addition to management, we've owned 15 investments worth about $60 million. And of course, we've done multiple syndications in the past and managed about 60 investors. Let's continue to talk about our experience, because experience starts at the top with me. I'm a CPA by background. I spent 7 years at Deloitte. I'm a real estate broker in 2 different states, Florida and Ohio. I was a commercial loan officer with a regional bank in the Midwest for about 5 years. I've also owned 3 Cessna pilot centers, which were a Part 141 pilot school that was a feeder system for the Delta connection, training airline pilots to get into the Delta system. I have a master's in accountancy from Case Western Reserve, a small private college near Cleveland, Ohio, and I have a bachelor in business finance from the University of Toledo, the town from which I grew up. All right, let's talk about our track record. Our track record is on the screen for you. It's a whole lot of numbers. Here's what's really important. What's really important is you look at the column that I've shaded in pink. That's the actual annual return on investment for our investors. You'll notice in the early years, our deals were obviously very highly leveraged. That's why the returns were completely out of control and incredible. Our more recent deals are the result of syndications. So you'll see, 20, 25, 30% annual returns. This document is available. If you want to review it in more detail, I can certainly provide that to you after the webinar. All right, let's talk about what makes us tick, right? Our core investment discipline. And there's 2 things I'm going to talk about here. First are our guiding principles, and the second is going to be our underwriting process. So our guiding principles, and I've pushed this through our company for the last 23 years. Number 1, honesty and integrity are always going to be our foundation. If we can't make money honestly, then we're not going to do it. Secondly, we are always going to align our goals with that of our investors. That's just the way it is. Thirdly, we always provide complete transparency. For those of you who have invested with us in the past, you know that we have quarterly reporting that includes not only the financial information, but also a narrative about what's happening at the property, what our plan is, what we expect to happen, and so on. And then, of course, we also provide narrative updates in between quarterly updates if something happens that we want to share with you. Now, our underwriting process is equally critical. Unlike a lot of firms, our management experience, remember I said we manage 15,000 units, allows us to underwrite from the bottom up. We know what the actual expenses should be. We don't use industry averages. We don't use books and figure out how much the book says this should cost or that should cost. That's not how we do our underwriting. As a result, our underwriting is much more accurate than many. Secondly, because we've been doing this for so long, we do extensive and focused due diligence. So we're able to identify the relevant risks and figure out if we can mitigate those risks. That makes our process much more efficient so that we don't waste time on issues that don't matter. Third, we always develop multiple exit strategies on every deal that we do. It's because we know that things may change over time, and we want to have at least a plan B or a plan C should that make the most sense. And finally, we are never afraid to timely exit a property to make sure that we maximize your return on your investment. Some companies will hold properties as long as possible because they're collecting fees and so on and so forth on the property. That is not what we do. If we can get you out of the deal, we planned for 3 to 5 years, and we can get you out in 2 and maximize your return on investment, that's what we do. In fact, we're selling a property right now as we speak that we've been in now for 2 years, and we have more than beat our expectations, and it's just the right thing to do right now to exit that particular property. All right, let's talk about execution, because I think this is one of the most important things. Number 1, we always create a plan for every property. We reevaluate that plan, and then we revise it. Then we reevaluate it. Then we revise it again. This process is very iterative, and it goes on all throughout the holding period of an asset. Our goal is to always maximize our results with minimal input. And really what I'm talking about here is preserving your capital. We are very careful to not over-improve properties. That is one of the biggest mistakes that I see investment companies make. They put in granite when it certainly is not necessary. They use stainless steel appliances when they didn't need to. They could have used black appliances to achieve the same goal. So they're always very, very careful to make sure that we don't spend more than what we need to, and that's called preserving your capital. When we renovate, we do a few things that are, very structured about how we operate. The first is we always renovate from the outside in. That means we take care of curb appeal, grab the potential renter's emotions right away, and then as we go inside the units, we don't necessarily need to spend as much inside the units because we've already wowed them on the way in, right? You ever heard the term, you have me at hello? I think that was Jerry Maguire. Also, during our renovation periods, we always try to maximize revenue. We are always able to maintain 90% plus occupancy even during renovation periods. And the reason we do that is because why not? The more occupied we are, the more cash that we have provided by operations, which go even further to preserve your capital. And finally, our turnaround plans sometimes are just a two-stage plan. We go in, we clean things out, and then we get to where we need to be. But sometimes it's a little tougher of a turn, so we'll have an intermediate step in there. So it's either a 2 or 3 stage turnaround plan that we implement. The bottom line here on our execution, things are always changing. We're always monitoring the environment. We're always making sure that we're doing the right thing to make sure that we get to where we need to be as quickly as possible. All right, our target markets, you'll see here on my little map of the state of Florida. We are all over Tampa, Orlando, Daytona, up I-95 into Jacksonville. We will be soon in Northwest Florida, and we will be expanding into the Sarasota, Fort Myers, Bradenton markets. We're currently about to do some management work in both of those markets, so that will be in the future. But as you can see here, we're very deeply entrenched in our target markets, and I think that's very important because you have to know these markets. These markets exist on a very localized level, very sub-market, even block by block in some cases, and you have to understand that when you're in this business, and we do. And lastly, again, our investors, you guys always come first. You see, I have a family just like you do. I know why you invest. You invest for your family. You invest so you have money to put your kids through school. You invest so that you can have a nice retirement. I totally understand that. That is why we always will put you first, no matter what. Okay, some additional information that you definitely need to take a look at in order to become part of the investment family here. There's a private placement memorandum in the investor portal I need you to look at. That explains a lot more than what I've talked about here today, but it's very important that you take a look at that. All the subscription materials, including the operating agreement and the subscription documents themselves, they're in the investor portal, so please take a look at those. If you want to take a look at what properties we've managed throughout the state of Florida, Ohio, Pennsylvania, we can get you the list of those 15,000 units. And of course, as you recall, there was a page in my presentation where I talked about our previous investments. I can get you that listing as well, should you want to take a look. Just let me know. So that's it. I hope you've enjoyed this webinar. I've certainly enjoyed putting it on for you. Hopefully, I've answered some of your questions. If not, please do me a favor, reach out to me, ask me any question you like. We've been doing this a really long time. There's not a question that you're going to ask me that I probably haven't already heard. So please make sure you ask questions. You can either email me, you can go to our website to learn more. If you like, you can look me up on LinkedIn. What's important is hopefully you understand why KRI has been so successful, and hopefully we can add you to our family of investors really soon. I very much look forward to it. Thanks so much. Have a great day. Hello, everyone. This is how you get started investing with KRI. The process is actually quite simple. It's a 5-step process. Step 1, simply call or email me or any of us here, and we'll send you out 3 documents. The first is a private placement memorandum. The second is the operating agreement, and the third is the subscription agreement. I just need you to take a look through those documents and then consult any of the advisors that you normally work with, whether it be your tax accountant, your financial planner, or maybe even an attorney. Please consult whatever advisor you feel comfortable doing. Number 3, just ask questions. Give me a call. If you have any questions at all, I'm happy to answer them. I enjoy talking about what we do, so I'm happy to spend time with you and answer any questions that you might have. After that, then I send you the DocuSign version of the subscription agreement. You can either sign it electronically, or if you're more comfortable hand signing it, that's certainly fine too. But nonetheless, the subscription agreement, just sign it, and that means you're in. Then finally, last but not least, the SEC does require that we verify that you're an accredited investor. It's very simple to do. Most people simply ask their accountant or their attorney or their financial planner to just send us a quick letter saying that they can vouch for you that you are in fact accredited. We put that piece of paper in the file, and that's it. You're done. You're in. So I hope this was helpful. And again, if you have any questions, please reach out to me. I look forward to talking to you.